Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Rising stocks to start a busy week for your money. We, of course, are watching Iran and Israel, developments there, a Fed meeting coming in a couple of days, at least the decision, and the G7 ongoing, as you saw earlier, that bilateral between President Trump and Canada's Carney. All our eyes on everything today. Joe Terranova, Carrie Firestone, Jim Leventhal with me at the desk. So, Joe, we have Iran signaling, according to the Wall Street Journal, that they want to negotiate. The president all but corroborating that in the little spray they had with reporters at the G7 Fed decision. Yep. Oppenheimer says downward pressure on stocks is unlikely to be a protracted overhang. Is that how you feel as well?
That's how I feel, and that's what the market is telling us. We have the NASDAQ 100 and the comp both above Thursday's close. The S&P 6045 was the close on Thursday. We're about 4 or 5 handles below that right now. So we've made this dramatic recovery. 16 52-week highs for S&P 500 companies. You've got IBM, Microsoft, Palantir, Darden, Dash, some names that I've mentioned frequently. And yes, we continue to show the resiliency in this market. And what's interesting to me is not even the geopolitical aspect of it, is the inability with the geopolitical events to see relief in Treasury yields. We didn't get the buying in Treasury yields. Maybe the markets were pricing in some inflationary outcome from oil. I'm not sure. I don't think anyone ultimately really knows.
There are like 5 different hypotheses on why yields were doing what they were doing on Friday. And almost got a different answer for 5 different people that I interviewed on either program on Friday, either halftime or closing bell. It seems like I got a different answer.
I agree with you. And the reality is you have a 10-year sitting at 4.40, and that was supposed to be a challenge and a problem for markets. But here we are, the S&P 60-40 pushing towards a new all-time high, and I still believe that's where we're going.
Carrie, it feels like when that headline crossed that Iran was signaling that it wanted to negotiate with Israel, the market got a little bit of a pickup off of that. We've pretty much held it. We're off a little bit from where we were. But do you agree with Oppenheimer today that whatever downward pressure comes to stocks because of geopolitical events or otherwise are unlikely to be a protracted overhang?
No, I don't think I agree with that. I think they're trying to, broad brush, say that the market is going up, regardless of what happens.
And you don't agree with that?
I think the market has certain constraints that are built in, and we've seen it this year already several times. The market gets to the 22 times forward earnings, and it seems to be pushing up against a ceiling. I know that the markets can trade to 23, 24 times, but this market seems to have trouble pushing through that, and I blame that on concern about earnings growth. And it could be earnings growth or less than expected earnings growth that's a result of tariffs or any kind of events or inflation or just the employment situation. We haven't had a bad situation with employment. It's all positive. But that's what the market begins to worry about. So I think we're still in that range that's bound by valuation to some extent rather than by what's going on from either Trump's conversations or what's happening in terms of who's bombing who.
Krinsky at BTIG is looking at a choppy summer ahead, that the S&P the S&P is into formidable resistance at 60.50 to 61.50. Pay attention to where we are now. We're at 60.36. That you have initial support at 59.70. I know we're throwing these numbers out, but that's what the technicians sort of do for a living. Major support at 5,800. So as long as that holds, the bulls maintain the upper hand, and we can expect new highs later on in the summer. Make sense, Jim?
I think pretty soon, frankly. You know, look, we're 1.5% away from an all-time high, and we know what happens regardless, Carrie, of the analytical skills, which you just displayed, which I love as well. You know, once you get to that all-time high, FOMO hits in. It's going to happen. It has nothing to do with numbers or forward multiples. It has to do with people looking at what's going on and saying, I want in. I think that's what's going to happen. I think it's going to happen soon. And actually, I actually think the numbers support it from this perspective. If you look at earnings estimates for next year, and I know this is a long way away, $300 a share. Carrie, 22 times $300 a share, $6,600. Now, the question here is, are we actually going to hit those estimates? Well, that all depends on trade deals coming through, the tax bill getting getting through. And I actually think those are going to happen and that you'll get a clear runway. So, Scott, when you were talking about Krinsky and the chop, that chop to me is what happens in the summer as people shift from looking at 2025 earnings to looking at the year ahead earnings. And it's not a perfect transition. It's choppy as it happens. But if you get some trade deals, if you get the reciprocal tariffs down to a reasonable level and the budget bill in place, this market goes higher on FOMO.
So maybe it is FOMO. Joe, I thought that note today from Goldman Sachs sets the table for so many different layers of this conversation, that households' allocation to equities hits a record high. 49% of their total financial assets are in equities, the highest level on record, and slightly above the previous peak of 48% in the year 2000. That suggests to them that if you continue to get high allocations to equities, you obviously have support for where the market is, and you support the valuations that some have here questioned.
Yeah, I think what's interesting is that households really never moved to the sidelines when we had the sell-off in April. It was institutions that were moving to the sidelines. I respect your argument about 22 times being a little bit rich. Jonathan Krinsky saying the markets could chop. I don't know if that's a reason to sell, though, because I think all that means potentially is you soften somewhat over the third quarter and you pull back maybe to 5,500 and 5,700. And from there, where do we go in the fourth quarter? So I don't use that as a reason to sell.
But I wouldn't sell.
I think more it's set the expectation. Okay, maybe you are not breaking out above the all-time highs that Jimmy and I see coming. Maybe you get up there and it's a little bit of a short-term trap. But I think over the next 6 months, there's continued support in the form of strong corporate earnings and potentially in the form of some regulatory relief.
When I saw rally forces options pros to line up hedges. That's according to Bloomberg today, and you have a number, Jim, of names within the tech complex that continue to rise.
And of all stripes, frankly. So I'll start with NVIDIA, which is everybody's favorite, right? I mean, what is it, about 6% from an all-time high? Much like the market, I think it's just going to get sucked up there. And once it hits that all-time high, again, Gary, FOMO, it happens. But if you want to look, and basically, whether it's the market or the technology sector, this is a stock picker's market. So if you're somebody like me, you're looking at stocks that are value tech, but which are doing phenomenally well. You can look at a Cisco Systems. You can look at a Qualcomm. You can look at a Google, Alphabet, which we've been talking about a lot in the past few weeks as a value tech stock, but stocks that are starting to work. So you don't have to just kind of hold your nose and buy the most expensive technology stocks out there. As I said, all stripes of technology stocks are working, and for the very good reason that that's where earnings growth is.
It's been remarkable, the breakout that we have seen in Microsoft, and I think it's AI related. And look, I'm not just saying this. I watched.
It's Apple related.
I watched Thursday's show. Brad Gerstner was phenomenal in just simplistically describing the universe that we're living in here surrounding this innovation.
But record high today for Microsoft.
Record high, continues to break out. Meta trading remarkably strong as well. NVIDIA trading well. And yes, to your point, it's Apple throwing up your hands as a shareholder and saying, okay, what am I getting from you in the near term that's going to revive the growth and give me confidence that the AI strategy is ultimately coming?
Apple? Because
they're going to deliver.
No,
they're going to deliver. I disagree with that. Apple will deliver.
But
Apple will deliver on the AI strategy.
Is there any reason for me to add to it right now? I just can't come up with a convincing reason to add right now.
You have a reasonable alternative in Microsoft. You have a reasonable alternative in others. And oh, by the way, at some point, OpenAI is coming.
Well, you just said an interesting question. The stock has obviously not performed great relative to the other Mag 7s. Is there any reason for me to add to Apple now? Well, when do you want to add to it? When it's 250? That's my point. I mean, aren't you supposed to add to stocks like that when they go through what this one has?
That's an incredibly valid question. And you know that that's what I like to do. We're going to talk about a technology stock a little later where I'm doing the exact same thing. With Apple, it has been just stuck in the mud for so long, and it seems to me to be dependent on this super upgrade cycle that just isn't happening. I agree, Joe. It is going to happen. Scott, I think your question implies that you think it's going to happen, and I do think it's going to happen. I just don't think it's going to happen in the next few months.
I don't know whether it's going to happen or not, or under what time frame is it going to happen. But it's interesting to hear a value investor look at a stock here and say,
it's 26
would
times.
I really add to it here?
26 times forward. But I want to answer your question, and for the viewers more specifically, when do you add to it? Let it develop an uptrend. It just shows no sign of light. I mean, none.
I'm not
It's
sure.
also not, people would say it's not like it's floating out there cheap, waving its hand in the air and saying, hey, look at me. I'm, under 20 times. In fact, they're like 26, 27 times.
I think 21 is the 10-year average. So, no, it's a little bit rich in the near term. I don't know. You can't bet against it. I'm not sure you
selling it.
You can't bet against two things, the ecosystem and the ability where they continue to buy back their shares. So you can't bet against that. Buying it right here, look, you have alternatives, and there's competition. When you think about the Mag 7, I could go to other places. I could buy a Meta. I could have bought Microsoft a couple of months ago.
Well, how about Amazon? Amazon's investing nearly $13 billion in data centers in Australia. This is after AWS invested $20 billion in Pennsylvania data centers last week. They invested billions more in North Carolina, so they're going all in. Into where they think that they can get to. Everybody owns that stock.
Personally, I own that.
So,
and I think that shows my conviction because the JOTI ETF does not own it. And I said to myself, I want to, because of what you're citing, related to the cloud, I want to be there and Amazon own it personally.
So here's an interesting thought about Amazon. And it's a stock we own, and we're very overweight it. And we bought more fairly recently. But no one has thought about this angle. We all know that people want delivery, and they want it quickly, and it's very convenient. But there are so many cases now in cities around the United States where the stores that people were buying goods, whether it's Target or CVS or Walgreens, are either closing or shrinking their inventory because of shrinkage, because of theft, because they can't find workers for their retail locations, that Amazon becomes the only option that people had on the retail side. AWS keeps growing, of course, because of AI, but I think that the retail business that Amazon has taken is getting another lift up right now.
I don't know, AWS, as we asked the CEO last week in the exclusive interview that we had on the network from out on the West Coast, they're really trying to take the example of their marketplace and turn AWS into the marketplace for AI. That's the trajectory that they feel like they're on.
And, AWS is a meaningful, I think it's over 50%, Carrie, of their profits.
Yep.
So, I mean, that's really where the growth is. You made a compelling case about why people are not going to buy at CVS, fine. And there's also the tailwind developing of China becoming less of a headwind, the tariffs there becoming less of a headwind. But really, this is now a pure play not pure play, but it's almost a pure play technology stock. And I would submit to you it's not expensive, roughly 35 times forward earnings, but we always want to adjust that for the amount of R&D spend that they're doing, the amount of new businesses that they're developing. I think it's cheap, frankly.
Meta got a price target bump here, $775 from $665. That's at Oppenheimer. Stock's at $700, more or less, as we talk about it here. You still own that?
Amazing. Yes, still own it. Haven't sold any stock. It's been, a phenomenal performer. I think that the market liked what it heard from Meta on the advertising front, what they can do for clients to create their own ad program, their own design with the tools that Meta is applying for them. I mean, that was an amazing, I think, game changer for their biggest business. So that also is going to be a generator of revenue for them that no one had really factored into their models to the extent that they're going to.
Not everybody, by the way, has been a runaway winner in this AI race.
No.
You got sick and tired of holding Adobe.
Yes,
As
true.
Some have said they're just not in the same league with some of these other stocks that have done remarkably well relative to the performance here. Adobe's coming off its worst week since June 4th. That's after earnings. It was last week. You sold it.
Before earnings.
Why?
Right. We sold it because, unfortunately, they're having trouble delivering. They're having trouble in their major business, Photoshop, where people use Adobe tools to create content that they couldn't do otherwise.
Well, now you can do otherwise.
And now
That's sort of my point.
And and unfortunately, this news from Meta, and it's Google, and it's going to be other places that people advertise, such as Amazon, the clients are going to be able to make their own content, and Adobe has not moved fast enough with their own tools to keep their business.
You bought the iShares Israel ETF.
Yes.
That's one move. But Enbridge and Suncor, how does that play into the totality of the story?
Okay, first of all, with the Israeli ETF, I've talked over the last several months about wanting to own it. It is near an all-time high, which it made on June 9th. Israel is the second leading exporter of technology. When we are talking about this innovation surrounding artificial intelligence, advancing to generative AI, Israel is right there alongside the United States, whether it's Checkpoint or CyberArk. So on Friday, you had the significant pullback. I believe that geopolitical pullback was an opportunity. You're getting exposure to 34% technology, 30% financial sector, another one of my favorite sectors. I wanted to step in there. As it relates to energy, everyone is trying to predict the price of oil. There's very few people that I know that can do it successfully. You had one gentleman on Closing Bell who you and I both know very well, Mark Fisher.
Yeah, and even he's having a tough time.
And he's having a tough time doing it. Okay, so I'm going to defer to Mark. What I'm going to tell you is the opportunity surrounding investing is thinking about where supply will shift if it ultimately has to shift. And so far, year to date, it's interesting because the Canadian E&Ps are actually outproducing all of its developed international E&Ps, whether it's Europe, whether it's the United States, whether it's Australia. So I bought two names. I bought Suncor and I bought Enbridge. Enbridge is the pipeline that is delivering the crude oil down to the United States. Suncor, obviously, is the EP. There's this insatiable need on the part of U.S. refiners for Canadian oil, and you have a 10% tariff on Canadian oil. Well, guess what? The Canadian oil companies are not eating the tariff. It is the U.S. refiner that actually is eating the tariff, and you're seeing the margin compression there. So if you want to manage your risk surrounding this, you could potentially buy some puts in some of the refiners, because I think an oil price in the mid-70s is challenging for the refiners. But the shift in supply, if it has to happen, Canada is the actual place where you'll be able to deliver the excess crude oil if the market needs it. And the performance so far there is year to date. And the earnings estimates in 25 in the U.S. collectively, energy companies have an earnings estimate in which they contract nearly 12%. The earnings estimate on Canadian oil companies, they only contract 20 basis points. So I think it's a great opportunity to think about, okay, I'm getting exposure to two names in Canada that have outperformance relative to its geographic energy peers, and also could be a source of excess supply.
Okay. We have retail sales tomorrow. Something to note, especially ahead of the Fed decision. You sold Casey's General.
I did. Listen, I have to give a hat tip to Ralph Coutant in our office. He's the analyst who brought this to me. The stock has been beyond a home run. And this is just one of those cases. I said it's a stock picker's market. You have to be willing to sell high if you're going to buy low. If you're going to buy some Adobe, you got to fund it somewhere. But it's just been a heroic stock. Now trades at a nice multiple. It probably goes higher. I'm not saying this is a terrible stock. Not saying that at all. I just needed funds for Adobe.
Discretionary, speaking of, has really felt like it's reversed whatever momentum that it's had. It's down 6% year to date, the worst performing sector. You do have casinos bouncing today. MGM had a good guide. BetMGM did. Wins up. Airlines up. Delta. Cruise lines up. You have a comment on those?
Yeah, these stocks are bouncing around day by day by day. I mean, whether it's Delta, I think it's up 4%. Wasn't it down 4% on Friday? And on the obvious news, right? When you got missiles flying over the Middle East, what happens is you start canceling flights that are money makers from the U.S. to Tel Aviv and elsewhere. So, look, it's going to be volatile. But when you look at these stocks, much like many of the other stocks we're talking about, there is good operational performance. And to the extent that the stocks get cheap, companies buy back shares, whether it's Wynn, whether it's Delta. So as long as the cash flows are positive, and they are, these are stocks you can own.
Today begins with Cisco. Mentioned it earlier. Jim did. Part of this cohort of old tech that has done really well. This one, IBM, you named some others. So it was upgraded today to buy. $73, Deutsche Bank. They think there's improved visibility towards a durable mid-single-digit growth number in the years ahead, and tailwinds from AI.
Yeah, I think probably high single digits beyond mid single digits. But I understand the analyst community is taking their time and they want to make sure that they get this right. But I think where we are with Cisco is where we were with Oracle 3 years ago. If you remember back then, it was still the database company. They were just building out the Oracle Cloud infrastructure. But once they did that, they got the multiple to go from the mid-teens to now the low 20s. I think the same thing's going to happen here with Cisco. I think it's already happening. Roughly 16 times forward earnings, 3% dividend yields, buy back shares like crazy. I mean, they've shrunk share count 20% over the last 8 years or so. And it is on the back of AI tailwinds. It's also on the back of security. You know, we always talk, thank you, Joe. We always talk about Palo Alto Networks, Fortinet, CrowdStrike. I get it, but there's also a really vibrant security business here, enhanced by the acquisition of Splunk. And on the last earnings call, Cisco was very clear that what they're seeing from their big customers, whether it's hyperscalers, whether it's enterprises, they want it all in one. They want the hardware, the software, and the security. Cisco's delivering it.
All right, yes, they are. Year to date up 11%. Insulet, initiated by 365 is the target at Truist, Joe.
Somewhat have to ignore the valuation here. It's in the mid-50s, a little bit rich. Stock's up 16% year to date. It delivers you the 20% revenue growth, but they have a degree of revolutionary type of medical device here with the Omnipod 5. That's the insulin patch. We're talking about dealing with diabetes here, not having to have that shot anymore. So new CEO recently just stepped in, Ashley McAvoy. Company is in the sweet spot. We've owned it for some time now.
Care Abbott initiated market performed today. Leerink 143 is the target.
Well, Abbott's one of these names that's defensive. It's not quite in the crosshairs of pharmaceutical companies that are getting bashed on all sides. Abbott's in the testing business, in the diagnostic business, and that business has been strong and steady. They come through with the numbers, and it's exactly the kind of healthcare name that can outperform.
Farmer Jim.
Disney. Joe, here's some numbers for you. Up 7% year to date, up 20% over the last 12 months. I mean, don't look now. The stock is actually breaking out. It's 1% from a 52-week high, which it set last week. Don't look now. It's breaking out.
It's called momentum.
Terry Firestone.
Applied Materials, AMAT, is also a stock that is breaking out like gems, and we think that the runway is long for these companies with the AI business booming.
Joe T.
Vistra Energy, utilities, similar to Constellation Energy. I think these stocks continue to press higher.
Okay, stocks are hanging in there. Dow's up 350. NASDAQ 280, that's up 1.5%. We'll watch all of this, of course, and take you through that final stretch. We'll keep our eyes on what's happening in Canada today with the G7. Trade, obviously, high on the docket for a conversation, and we'll follow all that, and I'll see you in a few hours.
Hey, everybody. Welcome to Blue Cloud Trading. My name is George. It's Monday, June 16th. It's after the close now. And I'll tell you, I mean, if you're new to this channel, it's a very unique channel. What do? We do something different. No other channel does this. We take clips from CNBC, and then we analyze the stocks that they discuss on the show. In fact, today they talked about 13 stocks that we're going to discuss here and some ETFs as well. I also do coverage of the indices, the SPY, the Q, the European ETF, FEZ. We'll look at the VIX. We look at some of the Mag 7 stocks, except for the stocks that I might be holding in my portfolio, which I share with just members. And then sectors, we'll cover some of those too, some of the strongest ones right now. So let's get started here. Let's look at the markets. They were actually up today. Okay, so let's take a look. The Dow was up 0.75%. You'll notice that it actually gapped up in the morning, moved up, but then progressively dropped, okay, after around 11 a.m. throughout the day. The NASDAQ, it also gapped up here from the prior day's close and then kind of stayed pretty level. It was up 1.52%. S&P 500 was up 0.94%, and the Russell 2000 was up just 0.90%. Here's the heat map that shows the individual stocks and how they performed. You'll see that, for example, healthcare. The healthcare stocks did not do as well as the technology stocks today, and the consumer cyclicals like Amazon, Tesla were up, Google and Meta were up. The financial stocks were up today. Utilities got hit. They were all in the red there. Healthcare plans were red. And some of the consumer defensive stocks didn't do so well either. Here's the sector rotation that's taking place here. You can see that once again, technology coming ahead. Technology up 1.6%. Communication services, consumer cyclical, and financials were the top four. And then energy, utilities, healthcare, real estate were at the bottom there for the one-day performance. But for the 1 week performance, energy is still in the lead. Now, there's been a couple of things that have happened since we've seen this little move up today. There was some optimism, earlier in the morning, but now there's a few new things happening. Just wanted to bring this to your attention. Is after the close right now as I'm recording this video. So what's happened? Well, stock futures fall as investors eye Israel-Iran conflict. Basically, if we scroll down a little bit here, it says that let's see, where was it? Right here. So, though the attacks went into a fourth day on Monday, Iran reportedly asked several nations, including Saudi Arabia and Qatar, to urge U.S. President Donald Trump to put pressure on Israel for a ceasefire. A Middle East diplomat with knowledge of the matter told NBC News. And then on Monday evening, now this is Monday evening, Trump said in a Truth Social post that everyone should immediately evacuate Tehran. That is not going to be positive for the markets tomorrow. I can guarantee you that. Trump also said, described the conflict as a shame and waste of human life. And then Israel's main short-term objective is to neutralize the Iranian nuclear threat. Longer term, the more difficult goal is to effect regime change. So these things can certainly affect the markets. And so tomorrow I think it's going to be a down day, honestly, based on just that alone. So just keep that in mind. All right, be prepared. All right, now what we're going to do here, folks, is take a look at, we'll look at the indices, how they closed. In fact, I can take a look. I can also, there's a little button above here I'm going to press, and you can see the stocks, how they perform for the day. I'm going to click a secondary button over here. It says include post market, and let's see where it's at now. Where are these indices at? See how they dropped a little bit? So that's interesting. But when we are analyzing, it's always important to analyze based on closing prices. Okay, so that's really important. So let's look at the S&P 500, the SPY ETF. It was up 0.95%, closed above there. It is above the moving averages. The 10 gets in the 9 period. The 26 period is the red line there, the Kijunsen. It's above the 200-day moving average. All right, that all started happening back here on May 12th. So if we go back in time, you can see that candle gapped above the 200-day. It gapped above the Ichimoku cloud, which is what we're using as an indicator here. It broke through this 575.35 level. A lot of good things happened on this based on that candle. Price moved up, it pulled back, found support at the 200, and then bounced off of it, and then it's continuing. Now, what it hasn't done yet, it hasn't broken through that 613.23 level. So as some of the commentators have said, just price has been kind of like stagnant here for the last 6 days or so. You can see that right there. Here's the QQQ ETF, again, stalling at that 540.81. So we're going to need some type of catalyst, a positive news catalyst, not a negative, because if things start to fall apart, in the Middle East, and then, this thing starts to continue to escalate, right? The war that they have over there, expect the markets to drop, in my opinion. They're not going to really be bullish. There'll be certain areas that do well, There will be certain areas. Stocks will do quite well. Gold will do quite well, gold stocks, but there will be a lot of them, and of course the defense ETFs and stocks will do well too. But just keep that in mind. I think that's why the market is stalling, because there's really not enough information for people to really feel confident about jumping into these markets wholeheartedly, right? We can certainly invest in individual stocks, which are doing quite well. There are specific stocks that won't be as impacted by a lot of what's happening. Here's FEZ, the Eurostoxx 50 ETF. This one here also stalling. Now, this is the 50, some of the 50 largest European stocks. And you can see for it looks almost like about a month now, that price has been stalling at these levels. The Dow Jones DIA ETF, same thing, right? Since May 12th. And we are currently at June 16th. So a full month of price just hesitating to move forward. So this is not a bullish environment really. It's just more a consolidation and stagnant market. One day it's up, one day it's down, one day it's up, basically, right? Overall though, if you look at the overall trend using the Ichimoku, we are more bullish than bearish based on the fact that price has gotten above the Ichimoku cloud. That's very important. You can see back here when price was under, it led to that big decline, right? All the way from December 18th here in the Russell 2000, actually even further back here on December 5th, price got under the Tenkan, and since then it had dropped approximately 27.47% or so down. Now it's recovered. It's down only 11.9% since that date. But we're talking about 6 months later, and the market has, the Russell 2000 has not done well. The interest rates are still relatively high. Smaller companies and mid-sized companies struggle more in this type of environment. What about the VIX? The VIX dropped 8.21%, so that's interesting. But that there's a little bit more positivity in the markets today because that's volatility and fear that's dropped a little bit, but it's under the 200-day once again. But it's above the Tenkens, and I think tomorrow it might pop back up above again, based on those comments from the Truth Social comments. All right, CNBC. Now these are the stocks they talked about. 13 stocks that we're going to cover. Let's take a look at those, whether they make sense. Now I pre-reviewed these before, put them all in here in a list for us to look at, and I put a little blue flag next to the stocks that I think look the strongest right now, looking based on the weekly and daily time frames. That's basically something that I do with all the stocks that I share with members. And just a reminder, guys, that this last weekend I also did a video right here, the Blue Cloud Trading members only video. This one actually was pretty long. It was an hour and 20 minutes. And I go over my entire portfolio. I talk about why I'm entering positions, why I'm exiting positions. I do a thorough analysis of the sectors. And I also provide 20 stock ideas for the upcoming week. And in fact, I did place some trades today. I shared those with members as well with Blue Cloud Legend level members. So how do you get access to these videos plus the posts? Real easy. Okay. What you want to do is click on the join button. Why does it say subscribe there? It usually says join. That's interesting. Did they change this? Subscribe plus? I don't even know what that is. Okay. That's really strange. Normally there's a subscribe button and a join button. I think they've changed something here. Let me see what happens when I click on that. Oh, okay. I guess that's the new button. All right. Bizarre. So I guess you have to click on the subscribe plus. All right. And then basically from here, you can select, there's 3 different levels. If you become a Blue Cloud supporter, you're helping to support this channel. All right. And that's very, appreciative for those of you who watch the channel daily. Blue Cloud Trader level, this is where you'll have access to the exclusive member-only videos that I do each weekend. And then Blue Cloud Legend level, you'll get those exclusive member-only videos. But in addition to that, I have some recorded day trading videos where I did some live trading. I've got some, and then there's the daily trade updates for the trades that I place each day. And I post those. Now, once you become a member here, it will pop up a new tab here. It will show up as membership. You click there, that's where you'll find the daily, trades that I place. So, plus I also include a screenshot of other stocks that pop up on my proprietary scanner. It's a buy scanner. Okay, now that we got that out of the way, folks, let's get into these stocks. Casey's General Stores. Now this is Jim Lebenthal was talking about this one. He's been buying this up for a long time, and this stock has actually done pretty well. If we look at the weekly chart on this one, you can see that since going back to over here, where price was under the cloud there, it popped above right there, And that happened back in 2022. Since that point, it's actually moved up 127%. So this is one of the best stocks that Jim Lebenthal on the show has been recommending. On the daily chart, we can see what happened here recently. We had a little bit of a consolidation right there. Price broke through this little trend line. It gapped up and it's continued to move up. Now it's a little bit extended at this point. We're getting some reversal candles right there. The little doji type candle or spinning top and a gravestone doji. All right. And I've got a candlestick cheat sheet that you guys can access on my Twitter page, which is @BlueCloudTrader. And it looks like this right here. You can find that link on my page too. So there's the gravestone doji. All right. There's a bearish spinning top. And it shows individual and double candle patterns and triple candle patterns, understanding candlesticks. I would recommend that you guys check that out. Okay. Casey's, and it's free on my Twitter page, x.com @BlueCloudTrader. All right, Cisco is another stock that's doing pretty good. You can see on the weekly chart, Tenkinson is above the Kijun-sen. That's the faster moving average, crossed recently above, but it's stalling at 66.50, this prior high. So that's what I'd wait for to see if it can break through that level first. Disney has, in fact, this was Jim Leventhal's final trade back in May and on June 16th. And it's looking pretty good here. It popped today above that weekly level, 118.63. Let's look at the daily chart so you can see that. Now it is kind of stuck in this little consolidation box is what I call it. I'd wait for it to pop again. Maybe get above that high. And then it should expand up to the 126.68 level. And that's approximately 5.7% away from where we currently are. This was Joe Terranova brought this one up. No, he didn't. Yeah, he did. Yeah, this is the one he brought up. EIS, which is the Israel Capped Investable Market Index Fund. Here it is in the weekly chart. Strong chart. It's above the moving averages in a strong uptrend. Here it is in the daily. Also popped today above, up 5.73%. This might drop tomorrow based on the news, though. So I don't know if I'd be jumping into this. The other problem with it is it's still stuck under these prior highs here. Okay. So that's why I would not be entering quite yet on that one. SU is the Suncor Energy. This one here looks like it's going to reverse, honestly. So what you got here is a hammer candle. That's a reversal candle. And you've got a shooting star candle. That's also a reversal candle. The fact that it stalled, and you can see that it gapped down today, right, from Friday. This was Friday's candle right here. And it gapped down. That tells me that there's a higher chance that it's going to pull back. Now, it might just come to the 39.12. It might even just come down to the Tenkinson and then bounce. But right now, I wouldn't be adding positions here. It was down 0.71% today. Adobe, that was, I believe Kerry was talking about that, Firestone. So this one here on the daily chart, you know, it's looking pretty good as far as pulling back, finding some support at the cloud, but it's under the moving averages. And if we look at the weekly chart, it's still under the cloud. So not something that I would be adding into my portfolio. I'll tell you that right now, because if you're looking at a chart, you want to look at both the weekly, in my opinion, both the weekly and the daily. If the weekly chart is in a, you know, long extended downtrend, and by the way, we're talking about, you know, since 2024, all right? So you can see that this stock has been declining. I would not be adding positions here. I'd want to wait for it to break through the Ichimoku cloud first on the weekly, then it makes more sense. And that's one of the things I teach about in those videos. AMAT is Applied Materials Inc. And this one here was Kerry's final trade. And this one here, I would not add a position in. Now, it did break through, looks like a trend line. Let me just show you. See that high there and that high? If we extend it through, you'll notice that it broke right there, okay? And now it's retesting this level, 176.38, which is based on that little candle right there, the shooting star. But it's still under the cloud on the weekly and on the daily chart. All right, it's just not something I would be jumping into. It does look more bullish on the daily. If you want to take a chance, that's up to you, right? If you do, make sure that you're also utilizing a secondary lower time frame. So if you make your decision based on the daily, switch it also to the 2 hour. All right, and look at that for constant. But look at both. Use 2 time frames when you're making a decision. All right, you can see that there it found resistance. It found resistance around that area and there, and it's still finding resistance. It's just barely getting above that level. I mean, it might take off here, but it's difficult to tell at this point still. DAL is Delta Airlines. That one that's a 2 hour. Let me look at the daily. Not ready yet. Okay, it's under the Kijinsen, as you can see, and then we've got a negative crossover of the moving averages. ENB is not Enbridge. That's an oil and gas midstream. That pulled back today, down 1.52%. You got PODD, which is the Insulet Corporation, medical devices. That one also pulled back here. Not a good time to be adding there. Qualcomm, no on that one too. You can see it stalled at that 200-day, that yellow dotted line. The 200-day moving average, we got a spinning top, reversal candle, and boom, it dropped. And what happened? It found support at the Tenkan-sen and bounced, and now it found resistance at the 200-day. So it's kind of stuck, right, in between the two moving averages. We'll find out, who's going to win here. Is it going to be the bulls? Are they going to push it through that 200 and with some emphasis and some power, or will the bears take control here and pull it right back down under the moving averages and retest the cloud again? Who knows? We'll see. Right now, I would not be adding positions here, though, based on that. And that's the beauty of technical analysis. If you've got a system and some rules, folks, it can make your life a lot easier. You'll have a higher probability of wins in your trades, okay, because you're using a system, and it's based on basically mathematical formulas. That's what this is. The Tenkan-sen is a 9 period. The red line is a 26 period moving average. You get the Ichimoku cloud, which is also based on, it takes the average between the Tenkan-sen and the Kijinsen there, and it projects that 26 periods into the future. It's a very unique indicator if you think about it, right? And the fact that they actually developed this, a Japanese person, and developed this in the late 1930s originally, published it in the late 1960s. And then it became really popular in Japan, and then it got adopted here in the 80s in the United States. That tells you something. There's a history behind the Ichimoku. Google it. You'll see what I'm talking about. It's very interesting. That's why I love this indicator. It's very visually appealing as well. I mean, think about it. You get a cloud on your chart. All right, it just helps. And at a glance, the idea really is just, Ichimoku stands for at a glance. You can quickly assess the scenario, the situation, and then move on to the next one. So if you see that, okay, it's above the cloud on this daily. How about the weekly chart? Oh, it's under. Okay, I'm going to skip this stock. All right, it's that simple. Vistra, on the other hand, is on the weekly chart, is above the cloud. Okay, on the daily time frame, it's also above the Ichimoku cloud and above the moving averages, but it's stalling at a prior high. So you can also use traditional analysis, which is using highs and lows of prior levels, like the 178.30 that you see right there, and stalling right there. And so I would hold off. Now, but if it breaks through, it shouldn't have any resistance up until you reach the 199.84 level. And that's approximately 11.2% away. So that could be a nice target. All right. So Vistra, I like it, but not quite yet. I'm just waiting for some confirmation on this one. I also use the directional movement index down below here at a setting of 9 and the ADX, which is also superimposed on it. So ideally what you're looking for here, for those of you who are new to the channel, positive DI, the green line to be above the red line, the white line to be moving up. Okay, that means that the momentum is increasing. If the white line is declining, all right, that means that the momentum is decreasing. So yeah, that's some of the rules. Now, if you guys like the software that I'm using, it's called TC2000. There is a link here for a $25 coupon. Click on 9 more links on my homepage here, Blue Cloud Trading. Scroll down. There's a bunch of links here. This is the link right here for the $25 coupon. Click on it and just fill in the information, like your email address here. Download it for if you have a Windows PC. You basically just download the Windows version. If you're TC2000 for web, Mac, and mobile, right here. And there's some info on the coupon, and you can find the pricing here. And you can also use the brokerage service and trade right off the chart, which makes it very convenient. Alrighty, let's get back. So, Wynn. Let's look at Wynn Resorts Limited. Resorts Casinos. This one here on the weekly chart, under the cloud, no on that. And on the daily, it's under the Kijinsen. So we'll skip it. It's that simple. Just skip the ones that don't look right. Why overanalyze? Why waste your time, basically? That's my point. Time is money. You want to quickly assess things. You don't want to be overanalyzing, because then there's a thing called, paralysis from analysis, where you're stuck like, should I buy it? Should I sell it? Is this the right time? If you've got a system and this indicator can help you, right? It's going to make your life 1,000 times easier. Now, let's look at the Mag 7 stocks, except for Microsoft, which is one of the stocks that's in my portfolio. So NVIDIA on the daily chart looks good, right? I've got it flagged right there. It's above the moving averages. It's kind of stuck a little bit, consolidating this little area. So nothing really major happening for the last 6-7 days now. It's just there. So yes, it was up 1.92%, but the day before it was down, right? So like I said before, it's just the market is stagnant. Google, okay, on the daily chart looks good. The only problem with Google is when we switch it over to the weekly. You've got prices still inside the cloud, and one of the rules of Ichimoku is you don't want to add positions when that's the case. What about Tesla? Tesla is also stuck inside the cloud on the weekly, so I'd skip that one. Here's the daily chart. Amazon looks good on the daily, on the weekly, above the cloud. However, the faster moving average is under the slower one, so it's not really a super strong, trend here that we're in quite yet. The future cloud is also bearish. That's when the Senkou span A, which is that lighter colored blue line, crosses under the purple line, as you can see right there. And then you got Apple, which is also under the cloud on the weekly chart. So I'd skip that one. Here's the daily chart. Not looking that great. Okay. It will have its day, but it's going to take a little while. I think the whole tariff situation needs to be cleared completely and figured out, all right, before Apple has an opportunity to move back up again. It's really 100% up to Donald Trump to finalize and figure out something that's going to work so that the companies don't have to try to manufacture. Apple's not going to manufacture their phones here in the United States. I promise you that. It's not within the next decade. It's just not happening. Anyone who thinks that is insane. Okay, here's the daily chart. It doesn't make any sense. It's going to be so expensive that they won't be able to sell their phones, basically, folks. No one's going to work, okay, at the rate that that they basically work in China here in the United States. And he's already getting rid of all the people that could be doing those types of jobs, right? So who's going to be left to do those jobs in manufacturing? Pretty much nobody. It's weird. Meta. Here's the daily chart moving up. Here's the weekly chart. Tenkan-sen is under the Kijinsen. Not perfect yet. Okay, but I like what's going on with Meta. On the daily chart, it's pretty strong. It's kind of just stalling right there in that little consolidation still. All right, let's take a look at the sectors, just the strongest ones. I'm not going to go into all of them, but copper looks pretty good. COPX. Here's the daily chart. So on the daily chart, you can see it's kind of still stalling right in this little consolidation area. But on the weekly chart, we're just almost about to pop through the cloud. That's why I brought this and flagged it. It wasn't flagged last week, but I flagged it today for the first time because I think it's about to. Now, we'll see if I'm right or not. Okay, but I wouldn't be adding positions here yet. I wouldn't be jumping into this one. Bitcoin, all right, looks good on the weekly chart. Price is above the moving averages, but it's stalling still at this level. Here's the daily chart. XLC Communication Services popped back above the Tenkan-sen today, giving us a buy signal on the daily, and on the weekly chart, it looks pretty good. It's going to find resistance, though, at 105.64. What about industrials? Finding resistance here at 144.51, but I like the weekly chart overall. You've got the cloud turning bullish here. Remember what I said earlier about the Senkou span A? crossing above the single span B. You get the faster moving average above the slower one. You've got the white line, which is the Chiku span. That's the closing price today or this week. You know, the candle projects 26 periods into the past. If that white line is above the candle 26 periods ago, it's bullish. When it's under, like it was over here, it's bearish. How about XLK? XLK looks pretty good too. Just recently, this week, it popped the Chiku span, the white line. You can see that got above the candle 26 periods ago. That's the weekly level. It's also breaking through that 241.88. That's a daily resistance, which goes back to where? You can see multiple times where price was stalling here, and here, and here. And now it looks like it's really wanting to get through, doesn't it? So technology is almost, I think we just need to see a little bit. I'd like to see more confirmation. ADX is going sideways still. I'd like to see that moving up. It's not moving up yet because you can see it's consolidating still. All right, IBIT on the weekly chart is, I think it's building a little bit of a bull flag right here. Bitcoin is what I'm seeing. Let me just go ahead and draw that for you guys, and then I'll show you the pattern in another sheet. So there's the one of the trend lines. And then what you want to do is basically, once you have that trend line established, you can hit the create parallel line, throw that under the low right there. Now you've got the flag, okay? And here's the pull right here. All right, so that is the pattern. Now, let me show you that pattern. It's right here. So it's a continuation. The flag moves up, has a small little decline, you know, with a lower low, lower high, lower low, but it's a very small and basically contracted little decline, which is what we have here. We have a lower high. We haven't established a lower low yet, but I think that's what we're looking at. And so if it breaks through that trend line, expect a continuation basically, all right? SMH, it broke through this box and is continuing to move up. There's a great book by Nicholas Darvis, all right? The Darvis box concept. Check it out. It's really good. I love that book. I learned a lot from that book. XLU, utilities. XLU, weekly chart. It's under the Tenkan-sen, but above the Kijun-sen. It's a pretty strong trend, utilities. I'm sorry, that's the daily chart. The weekly chart, it's kind of just stalling right now at 83.41, but it looks bullish overall. GDX is gold miners ETF. This one here basically is pulling back a little bit, 1.67%. It broke through that channel. I had, again, there's another bear flag, bull flag, right? So you can see the pull there, a little pullback. It broke right there, and boom, it took off. And now you've got yourself a series of higher highs and higher lows. There's the higher low from the prior low and the higher high here from the prior high. So it's still moving. It's still moving up. And gold, which is GLD, it also broke the bull flag right there. Like I had mentioned, that happened here on last week on Thursday, June 12th. It popped up a little more on Friday and then pulled back to find some support at the Tenkan-sen. So as long as it remains above that level, I think that's pretty bullish still for gold. I think gold is going to do well tomorrow based on the news today. That's going to do it for this video. If you liked it, hit the like button, hit the subscribe button, you know, and support the channel. That's the best way to support it. It doesn't cost you anything to do that. And then, of course, if you want the extra content that I do, it's very educational. You'll become a better trader, I think. Then consider becoming a member. All right? And that's going to do it, folks. Thanks for watching. I will catch you all in the next video.